Hi, my name's Dave Treat, and I am just thrilled to host a panel discussion now around the progress and prospects of a U.S. digital dollar. It was 2 years ago that Chris Giancarlo and I announced the formation of the Digital Dollar Project in Davos. Sad to not be able to be there physically to continue the dialogue, but we are there in spirit. And I did slip in my driveway this morning, so I do feel like I'm having quasi Davos experience myself. So thrilled to pull together just an expert panel here of colleagues and friends focused on this space and members of our digital dollar community. I'm going to turn to each of them and have them introduce themselves. So we have David Kretz from Bank of America, Catherine Gu from Visa, and our newest member of the Digital Dollar Project, Jen Lassiter, who recently joined us as our executive director. So David, maybe why don't I go to you first? Please introduce yourself, your background, and focus on this space.
Okay, very briefly. Thank you, David, and thanks for everybody joining today. My name is Dave Kretz, and my role at Bank of America is I'm head of strategy and payments for transaction banking. So we have as clients companies ranging from the small end of their maturity to large multinationals and tech companies. Also, we have banks and non-banks as clients. And so what we try to do is deliver expert and high quality services around the globe, both locally and cross-border. And of course, that is a lot of that creates a lot of interest in a potential digital dollar. So that's why I joined David's invitation to join DDP as an advisor, and thrilled to be here today. So thank you, David.
Thanks, Catherine.
Good morning, good afternoon, everyone. My name is Catherine Gu. I'm the head of CBDC at Visa. So I'm part of the Visa crypto product team, which is a new and growing team. Very exciting stuff for us to do. Obviously, as the payment provider, we'd be looking at different ways to scale and build new digital forms of network, and CBDC is certainly one of the key aspects to it. So I guess on my day-to-day job, I cover a lot of the stuff around product and strategy, and we have a dedicated Visa research team that I work with closely in terms of looking at many of these sort of cutting edge technologies out there as central bankers are thinking about it, so that when we share those conversations with whether it's central banks or our banking partners or these emerging fintechs, we have a lot that from our own perspective, which is interesting to see what does the future look like. So very excited today to talk with Dave and David and Jennifer about the future of digital, because I think it's a very important aspect and lots of things that the DDP team is doing, which is very exciting. David.
Thanks, Catherine. Jen, please.
Great, wonderful. Hello, everyone. I'm Jennifer Lassiter, as Dave Treat mentioned, the newest member of the executive director of the Digital Dollar Project. I'm going to take just a couple extra minutes to kind of set the foundation for the Digital Dollar Project, how we work and how we're engaging various advisors, including Dave Kretz and Catherine Gu. But DDP is a nonprofit that was created to encourage research and public discussion on the potential advantages and challenges related to a United States central bank digital currency or a digital dollar. I think it's really important that we call attention to both the positive aspects that a tokenized currency could bring to the table, but also the challenges that it presents as we think about this symbiotic relationship between our central banks and our private sector. The Digital Dollar Project suggests a few foundational principles for a US central bank digital currency: assurance of individual financial privacy, enhanced security, greater financial inclusion, and transparency that enhances public confidence. I know we're going to talk in more detail today about how those principles manifest in a US CBDC, and I'm really excited for that conversation. As an aside, I love that as GBBC's panel has gone virtual, it has been open to the public, and we're able to have a really transparent conversation from a big tent perspective. It's great to have all the perspectives and stakeholders around the table as we're continuing this discussion. So there are a few tools that the Digital Dollar Project uses to encourage a data-driven discussion and decision-making around CBDC, one of which, my favorite, is engaging a variety of stakeholders like Dave and Catherine in experimentation. So we use a pilot format to collaboratively identify a hypothesis for a US CBDC solution. So for example, we hear often that CBDCs are going to remove barriers to inclusion to the financial ecosystem. But is that true? And if someone tells you that is true, how do they know that is true? Where is the data? How are we backing up that statement? So in our DDP pilots, we would define that hypothesis, simulate a use case, and then analyze and openly distribute the resulting data for consideration by a variety of sectors, academics, policymakers, financial institutions, et cetera. So DDP pilots move forward with this lofty goal, very worthy goal of ultimately enhancing monetary policy effectiveness and financial stability, providing insight for needed scalability, security, and privacy in retail, wholesale, and international payments. This is how large the scope is. And we work intentionally to experiment with technology that could integrate with existing financial infrastructures. Really important to have partners like Visa and Bank of America at the table for that discussion. And also CBDC-related projects that we all know are ongoing at the US Federal Reserve Board and banks. So big tent, big discussion, lots of possibilities. We love all the questions and the naysayers. We want to hear all the perspectives, and then we want to test them. And it's really exciting to be able to do that with this group of people in particular. So I'll pass back to you, Dave Treat.
No, thanks, Jen. And yeah. I'll just continue a little bit of just where we are. I've just been incredibly encouraged globally around the progress. I think the BIS reporting around just the 80+% of the world's central banks being on the journey and the lean in, the variety of production, pre-production, testing work that's underway is incredibly encouraging and raising just super important issues around how this should play out, the standards, the nature of the public-private partnership that's required, key elements of how the technology should work. How does it enable everything from financial crime management to the frictionless and efficient innovation frontier that's been unlocked. And so eager to get to Dave and to Catherine's view on respectively on a wholesale and retail perspectives in particular. And so with that, we're going to have a bit of a I'm not going to moderate. We're going to have a four-way conversation and ask each other questions as much as anything. So with that, maybe let's jump straight into it. Dave, would love to have you give the wholesale and Bank of America view on how this innovation wave is playing out.
Sure, happy to. And for those that wind up interested in these topics, and I happen to think they're very interested, David made reference to the Bank of International Settlements, and a lot of what I'm going to speak to, credit where it's due, comes straight from them. They do really detailed and thoughtful research, and I'll make reference to a number of things that they published, and it's all readily available. So first of all, let's talk about what wholesale is, what a wholesale CBDC would be, and start there, and then go into the opportunities. So retail, which Catherine will speak to, is somewhat more intuitive, and wholesale is a little bit more esoteric. In my business, wholesale has the implication in CBDC land of two things. One is tokenized settlement of interbank obligations, because we owe each other money. Banks owe each other money for making payments. So that's one. And the other is settlement of securities. So securities, when they're traded, then turn into cash, which wind up in your account or institutional accounts. And so there's an opportunity to both tokenize securities and in parallel, tokenize the cash settlement of them. So hopefully that's not too far afield. That's what we mean by wholesale. And if there's questions, we'll certainly take them at the end. So with that, you then go to why. So that's what it might be. So why would a tokenized settlement of either cash or securities have benefit? And the answer is that today, correspondent banking, which of course takes many slings and arrows, is conducted by leaving money at other banks so that they will make payments to a local beneficiary on your client's behalf, my client's behalf. And those are called nostro accounts, and really it's lazy money, and we all know that. And so the idea is that rather than leaving those nostro monies laying around, that we would do it with a tokenized and instant form of settlement. That's the opportunity. I'm not advocating, I'm just telling you that's what it is. I'll talk about the policy stuff in a moment. The other is that we also have cash on deposit, either in our own institution or at other places, so that when securities trades fail, that it can be settled in cash, even if the security itself hasn't been made whole or hasn't turned into cash itself. And so neither of these are terribly efficient, right? And so both of them potentially could be addressed by tokenized settlement that happens instantly. That, of course, is the core of it, which obviously a group like this knows from blockchain and crypto. But here we're talking about fiat and government-backed. So, okay, so if that's what it is, I talked about what wholesale is, and that's the opportunity, then the complexity is how to get there. And here, the BIS did a wonderful job talking about different models. And so one is that there are CBDCs, but they're only domestic, right? And so in that, the cross-border exchange, much of what I'm talking about is cross-border, would be handled through the private sector through something that looks a lot like correspondent banking. Now, of course, the nostros would go away, but still banks would talk to each other and exchange monies in a similar way. That's one way to do it. Another is that there would be an infrastructure, perhaps privately run, perhaps publicly, that translates. And so instead of having correspondent banking with crypto, or with CBDC, I should say, there's an interface. It's either a technical interface or something more elaborate in terms of clearing mechanism. And so that's another way of doing it. And then the third, which really makes your eyes widen, is that you could put everything onto a single ledger, right? And so there would have to be agreements across governments and across clearinghouses, et cetera, that there would be, in fact, be a ledger that has everything or close to everything. And so that's at a high level. What if there's a CBDC for dollar? Haven't decided yet. That hasn't come out yet. If there's a CBDC for dollar and there's a business case and public and private support of it, there are three ways to get there. So that's at the landscape here. So I think with that, I will turn to Catherine so that she can talk about in the same level setting way what retail would look like.
Absolutely. Thanks, David. I think, in this space is really active. And just like what, Dave Treat said at the beginning, I think just by a rough count, roughly about over 90% of all the entire GDP, countries that represents that is currently actively looking at it. And what we have seen, especially in 2021, is that, there's a clear shift of people or countries moving from pure sort of exploration research over to some sorts of experimentation. And I think, in this current 2022, we're going to expect more of those. In fact, for example, Mexico just came out probably 2 weeks ago now, just to say that they're ready to issue CBDC by 2024. So super fascinating to see these developments. And I think looking at all the pilots that have been conducted up to now, I think majority of them have been focused around wholesale, undoubtedly. Although it's interesting to see, because a lot of people are starting with a wholesale because they want to understand the underlying technology, they want to understand the underlying platform in order for them to inform them to the next phase, which is around, does it make sense for a country to issue a retail CBDC version? And I think that the notion there is really trying to think about making the CBDC available for both its own citizens, but of course, still available for the financial institutions. So more kind of a general purpose usage of the CBDC. And, when we're thinking about the general purpose or, the retail version of CBDC, the way we're looking at central bank digital currency is really, it represents this new form factor of money, which is essentially, I think many people have said it before, the digital version of cash. And what would that mean and what kind of properties it would entail? And I think especially, at Visa, we have by now spoken to about 30 different central banks directly and around these. Certainly, it's very clear that there's no one-size-fits-all sort of answer to, how should I be thinking about CBDC? How should I design CBDC when it's looking at, making it available to everyone? I think from our perspective, though, we do want to look at CBDC as a product, especially because if CBDC ultimately is trying to be intended to be used by the normal you and me, on a day-to-day level, we need to think about it as a product and what sort of key design principles that might be relevant when you're thinking about how to ultimately make that consumer product successful. And I would here, I think, highlight perhaps 3 different principles that's related to this 2-tier notion design, in which, you know, the public and the private sector play their corresponding role to actually successfully create the CBDC, but also to distribute the CBDC to the rest of the economy successfully. And I think the number 1 key principle is really about commercial bank readiness. Commercial banks, undoubtedly, whether it's in the US or anywhere else in the world, because they're going to be directly regulated by the central bank, have their fiduciary responsibilities, they will play a critical role when CBDC comes around. And knowing that CBDC will potentially be created on these sort of new type of networks or new type of ledgers, for example, like the blockchain, it is really important to figure out, you know, what are the underlying technology and infrastructure that might be required on behalf of the commercial banks to actually make it available. For example, things like custody, things like digital wallet infrastructure, you know, all the KYC, AML, and the software, as well as the hardware going to be required to support this new form of money is going to be crucial. And I think the second principle comes around to this thinking about CBDC as this new platform in which potentially other people can build and create things on top of, just like what we have seen successfully on certain type of stablecoin platforms. It is entirely possible when we're thinking about CBDC. And therefore, a second key principle that we have been advocating is that you have to have a very developer-friendly ecosystem. There's an issue about access, who can access and build and create stuff on top of, because it's going to be regulated, it should be, and you need to have the right set of frameworks to do it. But I think once those developers have been vetted and approved, then it creates a very exciting new platform, especially if you think, you know, money can be programmable and we can build new kind of monetary flows, new ideas on top of those. And that really instantly opened a whole new kind of, I guess, space in which businesses and e-commerce or digital commerce can be generated on top of. And I think that's super exciting towards sort of what it entails thinking about CBDC as a program of money down the road. And then the last thing, you know, we always bring it back, which is thinking about merchant acceptance when it comes to CBDC. Again, thinking about CBDC in the context of it being used for retail purpose, you have to think about both the adoption side from the consumer perspective, as well as the acceptance coming from the business and merchants. And there's going to be a lot of issues that we need to sort of navigate around because, you know, when CBDC gets first introduced into the world, the problem or the challenge for many would be, do I need a new sort of point of acceptance in order to actually, you know, get paid? And this is going to be a huge problem facing a lot of businesses as they're considering and trying to even understand what is CBDC. And I think, you know, here, this is where people like Visa, we can help to support that seamless integration on-ramp to a new type of ecosystem. So I think that's, you know, that's why looking at all these sort of key principles, as well as thinking about retail CBDC, it is much more intuitive, but I think there's a lot more sort of consideration that need to be put it in, just because now we're interacting with a bigger space with a lot more different sets of actors, including consumers, business, you know, developers, financial institutions, as well as the central banks. And to figure out these sort of different preferences and consumer behaviors within those is going to be really interesting for us.
Yeah, no doubt. And the if I add, it's, you know, to me it's fascinating the orthodoxies that we're challenging and breaking, right? That the you know, there's a worst case scenario here where we take how things work today and we simply digitize the analog process, and fortunately that's not happening, right? You know, if I highlight some of our work recently with Banque de France on the Swiss Central Bank on Project Jura, right? Even challenging the orthodoxy that going back to the wholesale commercial cross-border space, that one has to only clear fiat currencies within the domestic, you know, within the confines of the domestic, bank entity structures. You know, you have to have a U.S. banking license to be able to clear U.S. dollars. You know, that project challenging that notion to say, actually, the technology enables a degree of comfort and control to be able to consider clearing in a foreign jurisdiction, which is, you know, for you know, certainly, you know, mind-blowing for those that have been living this space for a long time. May seem obvious to the end user of, you know, the simplicity that we should endeavor to have in our global financial infrastructure. And these, you know, Catherine, I've just got to give huge credit, and I love using my physical prop all the time of, you know, if I bridge the two examples, right? If I were to sell Accenture shares because I wanted to go buy a set of golf clubs, right, on, you know, T+2, I've got 2 or 3 days to get, you know, from the sale to my brokerage account, and then, let's say I wanted to go brokerage to my checking account to use my, my debit card, right? We're talking 4 or 5 days to get that done. And, and now, with this, right. And, big credit to Visa for, for what they're doing, modeling it. And I know Dante and others are in the mix here on USDC, right? I can sell a crypto asset, and minutes later, have it transferred into USDC, and then swipe this card at that merchant terminal and buy the set of golf clubs, right? That the models there, and where we have to go now is turning it, is adding the foundational capability of doing it with fiat currency and all of the benefits that come from the government-backed full confidence construct of a central bank digital currency, and the systemic infrastructure at scale, and the characteristics of what systemic infrastructure and scale actually require, and how do we get there as quickly as possible. And so, Jen, maybe let me turn it back to you. Favorite myths or orthodoxies that we're breaking here. What have come up in your first few months of conversations touring through our advisory group and on the Hill and the like?
Yeah, actually something that, as I was listening to Catherine, also my mind kind of wandered into this space, which is this larger discussion around, we have a technical capability. I think we're seeing it experimented on, data being produced in a global context. We're working on getting that in the US context. But the new tech, if we really do believe that it does a far better job than kind of the status quo, then begs the question of reconsidering a lot of rules and regulations and how law treats technology. And as we think about the extraordinary mandate that a central bank carries forward with safety and soundness, economic policy, et cetera, how do we start to visit the conversations around privacy, for example? And can we have an open network that allows for privacy protections at minimum at the bar that they stand at today? And is that in conflict potentially with anti-money laundering or know your customer requirements, legal requirements? And so when I think about myth busting, I think about it in the context of these really critical questions that if we assume that the data is there, and I think we do, it's showing us that the technology has greater capabilities that we want to employ in the future, this future of money. How do we change, or what is the impact to the current legal framework that drives so much of the analog system that we exist in today? So maybe not a myth busting, maybe another question. I have some hypotheses. I'd be really curious to hear Dave and Catherine's reaction to that. And then maybe I'll layer on top if anything's still missing.
Maybe I can jump in quickly here, because I think what Jen said was super interesting, and it actually remembered me to talk about these sort of data centric, because I do think we absolutely need a lot more data than we have right now to understand CBDC. Because I think, when we're talking about CBDC, firstly, there's a lot of assumptions being baked in. We think that people are going to trust central bank money more than they trust private money. We don't actually know that, because this has never been done before in the world, I guess, in that digital form of money. We don't know what the consumer preferences are. And I can quote, for example, in a preliminary sort of consumer study, we've done this consumer study at the end of last year. We've done a little bit of a portion around stablecoins and CBDC, and I can quote some numbers, super fascinating. So firstly, between the emerging world and the developed world, there's actually a lot more people who have heard about CBDC in the emerging economies, about 11% in general. And by the way, we've done this study over 8 different countries. Each country, we have selected 800 plus of individual people doing the survey. So, that on average, there are 11% more of the population being sampled who have heard about CBDC in the emerging world. Now, in terms of the preferences of what they trust more, because that's the question, would you prefer to use, whether that's CBDC, stablecoins, or cash? So in the emerging markets, people's predominant preference is stablecoins. But interesting enough, when it comes to developed economies, the predominant preference is actually cash over CBDC. And that to me is really interesting because, I mean, we don't have the answers yet, but just knowing that, you know, technically speaking, CBDC and cash should be exactly the same. They should have the same risk preferences, except one is digital, the other one is physical. Now, why would potentially people prefer cash over the sort of CBDC? We don't know, and we would love to do more research. But, you know, some interesting, I think, other studies, we've seen the ECB conducting the public responses. We've seen that, you know, the number one priority for many consumers in their mind is that privacy comes the top. If they don't believe that CBDC is going to preserve the privacy, that in itself is a product that consumers won't adopt into. And I think going back to Jen's point, we need data to back it up, to actually test our hypothesis and to understand, you know, how do actually people feel about CBDC, because everyone has their different viewpoints about these choices of money. So.
David, any comments on that? I'll buy you some time to think about that. On the privacy angle, one of the things I think is fascinating too is unpacking privacy, because it is not a binary concept. I have it or I don't, and it's not uniform in terms of what, you know, in what types of transactions do I want to have what kind of privacy. And you know, and the like. And so we're doing a bit of work in that space, because I think that's, you know, it's critically important to get to a more granular understanding of what types of privacy and what situations. And then you know, interestingly, the role to be played. Again, I think very frequently we've had dialogue on the basis of of the whole notion of a central bank digital currency, you know, or stablecoin, you know, being you know, one thing, or let me say this differently, not directing enough of the dialogue to the multiple layers of the architecture that's involved, right? So the role of the wallet providers, you know, the role of the ledger, the role of the network, you know, the various roles to be played, and where do you put the logic to be able to, you know, to be able to achieve what we want to achieve around privacy. And the differential roles to be played, right? Both of your organizations, you know, play critical roles in very different ways in today's financial infrastructure. And what of that is important to preserve, and what of that represents orthodoxies to be challenged and to contemplate new and innovative ways of doing it.
Yeah, and that's right, and that's where it comes together, the retail and the wholesale side. So on the one hand, it's tempting to, you know, in a transaction bank and a wholesale bank, to say, well, I don't have to deal with privacy stuff, but it's not true, because we do have clients, particularly bank clients, that will be taking their consumers' money, potentially sending it across borders in a digital currency way, and suddenly not only do I have the domestic, but I have the international and the harmonization to deal with, and which goes back, you know, that's where transaction banking fits into what Catherine laid out, and then it goes back to really just, you know, a very important discussion that Jennifer laid out about balancing privacy, but also compliance. And so, you know, we're all in favor of both, right? We're all in favor of privacy that encourages adoption of products, particularly one that we, as an industry, put a lot of money into, but we're also highly attuned to keeping money laundering in check, right? And as low as humanly possible without, you know, squashing the financial system. So it's really complex layering those things together, or combining them together on a cross-border basis when you have to deal with privacy and money laundering, both locally and then cross-border. But that's where that's why it's going to be interesting when the Fed comes out with their paper, and what we discussed for those, you know, in the audience, that's all these things will be unpacked, right? Where the four of us are very eagerly awaiting the publication of the Fed's document, during which we'll look at all of these aspects: domestic, international, privacy, money laundering, interoperability, local acceptance. These are all things that we'll be looking for and then communicating with the Fed about.
If I can just say, I have two thoughts, Dave Kretz, that you picked up. One, I think what you just said is why the US is so uniquely situated, I think, to really lead in this space once we have those guardrails from the Federal Reserve System. And what I mean by that is that we already do safety and soundness, efficiency and payments, speed very well. The U.S. financial infrastructure facilitates that in a strong way. So I think that's a benefit. I think it's something that gives us a bit of a foot up to be able to really run once we have some more clear direction. The second thing you made me think of, which is another myth that I think is worth calling out here, which is, if we have a FedNow system, we don't need tokenized fiat. FedNow, will take care of that. We will have relatively instant payments in that moment. And that's a question. It's a question that I've heard from a variety of stakeholder groups that say, help us understand the difference between the two. So I'll put that myth out there for busting as well.
Yeah, and not to comment, specifically on FedNow, but I do love, a few of the central banks around the world, and something I hope to very much test here in the U.S. Is the whole notion that the entirety of our financial infrastructure is worthless without connectivity. You're out of luck, right? If you want to execute some form of mobile banking or online transaction without connectivity, and we have material both banking and in connectivity deserts here in the U.S. And so that ability, even to challenge that orthodoxy around the fact that if you have a tokenized asset, to be able to actually directly exchange, even potentially tapping at a terminal, right, Catherine? That the movement of a token from a phone to a terminal or phone to phone, enabled in an offline construct. Part of what the technology is being tested, and certainly part of one part of the use case. Obviously, we'd love to have solve 5G, 6G raining down on us from space and ubiquitously blanketing the planet, but it's still going to be some time before we do that, notwithstanding the U.S. announcements this week, or on again, off again announcements of rollout this week. I think there's there are multiple dimensions where, again, getting to that granular level of differentiation of what types of transactions, to Catherine, to your point, what type of consumer interest is there in the use of this, very much see this as it's another, it's a critical innovative tool to add to the mix. And it's not for everything, and it's not for nothing, right? There will be there are very powerful use cases where I think the value will be there. And if I bring it all the way back to where Jen started us off, making sure that we're grounding that, and to your point, Catherine, grounding that in real data to prove it, and to satisfy that it's a valuable way forward is just key. Maybe Catherine, let me turn it back to you just on a forward-looking view. I know Visa, you referenced some of Visa's work around this space. I'd love to have you share more about what Visa's up to.
Yeah, thank you, Dave, for that. So last week we actually made this announcement that this is the first Visa CBDC product initiative that we're launching of what we call the CBDC payments module. And it's really, going back to the sort of retail CBDC solution, is very much trying to figure out what could be a seamless acceptance method that we can help the financial sectors to onboard a CBDC into their existing application. So the CBDC payments module itself is an infrastructure, and it sits between the underlying CBDC network. In this case, we actually partner with Consensus, which is one of the world's largest blockchain providers, want to test out the technology. So assuming that, a CBDC network is built on blockchain, and then the Visa CBDC payments module sits in that middle as the middleware, connecting them ultimately to the front-facing banking application, so that tomorrow, if I open my Bank of America's banking app, I can have this option to open a CBDC account. I follow the set of instructions, and then I can fund my CBDC account, say with my existing savings money in my normal bank account, convert it over, and then I can apply for, whether it's a debit card or prepaid card, so that, tomorrow I can instantly pay at the store through all the sort of existing forms of payment experience that we know of, whether that's tap to phone, scan to pay, or click to pay, anything you like, all these familiar intuitive experiences that you have been joining today can be applied instantly to the CBDC. And the key to all of this is that, we highlight that this is a seamless acceptance, meaning that from the point of perspective of the merchants, they don't need to do anything. They don't need to upgrade the existing point of sale terminals. In fact, all of these, I like to call it, the magic happens at the back end, because the front end experience is just going to be just as good. But on the back end, the payments module together with the bank help to convert the CBDC back to the fiat. So on the merchant perspective, they're still going to see this as a dollar transaction the way they've always seen, except that this time round, consumers are using a new form of money altogether. And I want to kind of step maybe back why this is so important. And I think it's really like these sort of, I guess, realization come out of all the conversation that we have had with many different central banks around the world. And we're trying to figure out, definitely for each country, they have their unique objectives of why CBDC, but there's still some common challenges that they all share. And I mentioned that, a lot of the central banks do want to understand what is that user-centric design going to be evolving around, because when it comes to consumer adoption for any technology, it is a hard problem to solve. We just simply don't know if this is going to be launched successfully or not. So that's one thing. And then the other thing that many central banks do kind of concern about is the fact, how would CBDC, how would this new system be able to coexist with existing financial infrastructure? How can you integrate them back to that so that we can leverage many of the existing, say, economies of scale from the network effect, or the existing value-added services that we have already applied, i.e., for example, commercial banks and retail banks have been so good at applying KYC compliance, regulatory checks directly with the consumer side. How could you still bring those value-added assets into the CBDC world is super important. And with that in mind, we're trying to figure out, okay, from day one, right, if we want to actually let CBDC to be used successfully while still maintaining the existing infrastructure, what is needed? And this is what we're trying to build to really encourage, we want to build out this sandbox, which will be ready, by the way, in around spring this year, so that, once the sandbox is ready for banks and others to partner with us, this is the place for which we can then start generating data. We can then start building specific use cases and testing these theories and stuff to see whether that's actually true. And I think that's super important, because we don't know ultimately at this point in time whether, say, the US need a CBDC or not. But what is important, I think, is we all know is that it's extremely important for the next 2 years for us to actually test things, build things, to understand if it's going to work or if it's going to not. So I think, the next 2 years is going to be super important. And the role that we play is to facilitate and be part of that conversation, sharing the sort of either experience or the new products that we can offer to then support others to test out these different pilots and stuff.
No, thank you, Catherine. We did have two questions come in from the audience. I think we'll see if we have time to at least partially answer them. But the first one's interesting is, how is the U.S. progressing in the analysis of financial freedom and citizens after the implementation of the CBDC? This one we touched on a little bit around the privacy constructs, but maybe just one more thought to share, and then would love to have anyone weigh in. It is interesting to think about, obviously by definition, implicitly, a central bank digital currency is implemented under the governance and authority and operation of the central bank, and therefore subject to the law of the land, if you will. And so there's an interesting distinction between even the U.S. and Europe, and then certainly if we take Europe, Asia, the U.S., Europe, and China, you have three fundamentally different models. Where in the U.S. construct, in our privacy laws and regulations, a federally operated central bank digital currency system would be constrained by constitutional law to only being able to reveal data for due process, and would have broad restrictions, therefore, or no access from commercial entities, harvesting and use of that data, which is a very private construct, and so comparing that with Europe, where GDPR has broad limitations on commercial use and access of data and protections and controls, but on a relative basis, then wide use of government use of the data it's a different balance between commercial and government usage. And then of course in China's context around its approach to security and privacy, full governmental access and use of the data for its own purposes. Those three regional differences, I would argue, just on the basis of that base construct, the U.S. actually has every design principle of being the most private of those three in that construct because of those the constitutional limitations. Sorry, I kind of answer. Sorry, let me pause to see if anyone else wants to chime in on that one.
I just want to, you didn't digress at all. I just want to say that was a great illustration of the complexities of cross-border business, because what David laid out are the local jurisdictional requirements, and then a company such as ours and Visa as well, we all have to navigate how does it work when you send money across borders. And by the way, all that goes for, so David talked about privacy, and you've got money laundering, and you have all these other regulatory and policy elements to factor in. But this is what we get paid to do, is to figure that out, all of us.
Yeah, and then the last question, we're not gonna do justice to, but it's worth noting, right? And it's a personally very big point for me around the material number of people in this world who have no access to any form of official or government identity. Are we actually addressing financial inclusion challenges? When with the standards, obviously. There is no onboarding for the use of physical cash. Anyone can use it. If you have it, you can use it. It's part of the the specialness of what a fiat currency in physical form is. And so yes, it's certainly this whole space. We may be able to define a different standard that's closer to the standards around the use of physical cash. And it's something I think we all want to test and test and innovate around. But it's certainly not a panacea for that broad problem of digital inclusion, which also has to be solved, by definition. I think I rammed that in. Let's do the speed round here. Just fearless choice. What you're most looking forward to? What a prediction for the rest of this year or next year? What comes next, or what are you most looking forward to next? Dave, you're up on the video for me. Why don't you start, and then we'll go to Catherine and Jen.
Well, I mean, the obvious thing is the publication of the Fed's paper, or papers plural. We have a team that's been mobilized now for 6 months. We're sort of ready for the announcement. We know how to, as I said, unpack it. And so that's number one on our list.
I absolutely echo what David said just now. I'm super excited with the paper, especially they said that they want to release the code base as well. So this is where the time to build and to actually do some cool stuff on that. So I'm really excited. And I guess in the meantime, looking at the rest of the world, I think this year is going to have a few more pilots coming out. So really excited to see what use cases they're trying to apply, and hopefully be involved in part of those conversations as well. So.
Am I allowed to third that statement, which is a lot of excitement for guardrails, right? I think we're just waiting to be given some rules to play by and then experiment. And I just want to touch for a moment on the kind of inclusion comment that we received from the audience. I think it's critical. And that's why I talked about that as an example in my opening statement, which is a lot of folks, I think in their hearts, right? In their hearts, they really want this to, they want the future of money to prioritize inclusion. Something's not working within our system. How can we make our system better, right? And I think it starts at a very basic level in terms of defining what inclusion and access means within the various geographic regions or cultures, putting that up against other important societal benefits like privacy and fighting financial crime, and then figuring out how to measure it. So for me, it's like, give us the guardrails, let us experiment, which we're all in line to do. And then how are we properly defining and measuring success or not as we're testing some of these hypotheses? So I agree with Catherine. I think the next 24 months are going to be an explosion of data. And I'm excited to see kind of where that data leads us for our next iteration of work. So thank you. Thank you for the opportunity, Catherine and Dave Kretz, to partner with you, and Dave Treat, always thank you.
Awesome. So David and Catherine, thanks for joining the session, but thank you for both of your organizations and your individual lean in as part of our advisory group. We have, I think we're over 4 dozen now different advisors that cut across all facets of ex-regulator, lawmaker, academic, banking, banker, et cetera. Just really thankful to that broad group of advisors and excited for what's to come. It's been an incredible 2 years. The papers we published, the multiple rounds of testimony on the Hill, from Chris, and just wonderful to have Jen on the team now driving us forward, and so I'm going to read Jen's facial expression here as I say this. Looking forward to some announcements very soon, where everyone can get involved, and some great proof points through pilots. So thank you to David, Catherine, and Jen for playing with me here now, and ongoing all of the work that we're doing and driving together. So hope this was a valuable session. We're all eager to reach out and further connect with this community. Please send questions, comments, get involved. The Digital Dollar Project is a wide open exercise, eager to have the true public-private partnership brought to life to drive forward insights and valuable inputs to this innovation wave. So thank you. And Sophia, I will turn it back over to you for our next panel.